everyone. Happy Sunday. This is Simon with AvaTrade. Welcome to our webinar, Mapping Out Your Week Ahead. A special welcome, of course, goes to new people. And for you, I just want to explain what we do here in 2 words. We're trying to simply create a plan for the week. And as I like to quote traders when they say you plan your trade, and then you trade your plan. And this way, of course, there's no guarantee for success, but definitely creates a better way of doing things, more organized and not jumpy, chaotic actions. So that's what we're trying to do. A few things about myself. My name is Simon Friedman. I'm a senior account manager with AvaTrade. I started my trading career back in 2000, June of 2000 to be precise, as a prop trader in New York City. And I did it for about 11 years. And after that, I moved to, as I like to call it, less stressful environment. So it's been over 24 years of amazing journey. What I do now is amazing opportunity that I have to help our customers at AvaTrade. And that's it pretty much. The agenda of the webinar, what we do is we go through indices, stocks, commodities, Forex. We talk about fundamentals, we talk about technicals, trying to see the big picture, what's been happening, what is about to happen in this upcoming week. Risk warning, you can find the full statement at avatrade.com website. And of course, what we do here is purely educational. We do not suggest any trades. Social media channels, please feel free to subscribe. You have Telegram, you have X, you have YouTube channel, which are amazing sources of information. YouTube, as I like to say, it's my favorite. You have webinars posted there, including this one. If you are watching this on YouTube, please make sure to subscribe. Click on that bell so you'll be notified on new things coming in, which we do on a daily basis. Also, feel free to write your comments. Don't forget the likes. If you like it, you don't need to fake it. And if you do like it, just click on that like. Takes a split second, and it also helps other people to watch it. That's what I've been explained. There are more likes than the YouTube shows us to more people. Okay, so that's it pretty much. So before we go into the slides that I prepared, just a little bit of a big picture. We are, first of all, important to remember, we are in December. Historically, December is a positive month for the market. I think last week I spoke about it, about 73% of December's ending up higher. You have a possibility of a Santa Claus rally. Some are arguing that it already happened because of a different Santa Claus whose name is Trump. The moment he won the election, the market ran. We are currently at the all-time highs on equity markets, on the indices. So that's December. Now, we are 10 days away from Fed's decision. Important to know that. This upcoming week, we have a very busy schedule. We'll go through economic calendar in a moment. We have 4 interest rate decisions this week, so it's a busy week. And something to keep in mind. We'll go into details in a moment, but I just want to give you a little bit of heads up. Australia, Canada, Switzerland, and European Union, all those central banks are making their decisions on interest rate this week. Now, what else happened? Last week we had NFP numbers that came high. Everybody got excited. So it's good for economy, but it could be not so good according to analysts. It's not just my opinion. It could be not so good for the Fed's next decision, which the percentage-wise it went up. We're gonna go there and I'll show it to you. So currently we're, according to CME tools, the futures, we have about 85% chance of another quarter point rate cut on the 18th. Okay. So a few slides that I prepared. Of course, everybody's talking about Bitcoin and cryptos. This article is very interesting. It gives you a little bit of details what happens in the market. You have Bitcoin at 100. Dow 45,000. Don't overlook this part of the everything rally. And it says here 10-year treasury yields has fallen for 3 straight weeks after touching 4.5%. I'm going to show you the chart of that as well. So that's one of the articles on marketwatch.com. Now, I thought about it, right after that, to show you this article here. It just shows how media and everybody else, they need to create the market. So they need to feed both opinions, the bullish and the bearish. So this one, as you could see by the colors, it's not so bright. Wall Street isn't worried about stock market crash. That's why you should be. So basically what they're trying to do in this article is to convince us, or at least give us a clue, that we are facing a possible crash. So as it says right here, stock traders have become even more bullish and complacent, and that's a bearish sign. Also a nice article you can find at MarketWatch. Now, this is also interesting here, as I said at the beginning, that the NFP numbers show great things for economy, but it could actually make Feds to hold with the interest rate decision or the cut. So it says right here, Fed officials flag inflation concerns ahead of meeting on rates. And let's read it together. It's a short read. A string of up and down inflation readings in the second half of 2024 have Federal Reserve officials feeling less confident about the path of price growth in the coming month. And there is growing support for a pause in interest rate cuts in the none too distant future. A busy week of speeches and public remarks before a quiet period ahead of the Federal Open Market Committee December 17-18 meeting highlights the shift, as well as some of the differences in opinion among policymakers. On Wednesday, Fed Chair Jerome Powell took a measured view of the current state of the economy, describing a solid backdrop but the lingering inflationary pressure. The economy is strong. That's, they quote him. The economy is strong, and it's stronger than we thought it was going to be in September, Powell said. The downside risk appear to be less in the labor market. Growth is definitely stronger than we thought, and inflation is coming a little higher. So the good news is that we can afford to be a little more cautious as we try to find neutral. And this is the key paragraph here. Federal Open Market Committee, the Fed's policy making body, has lowered the federal funds rate by 0.75 percentage point since September, leaving it at the target range of 4.5 to 4.75. Recent data suggests there is no rush right here. Recent data suggests there is no rush to further lower interest rate, Powell said. So this phrase should be focused on in a way. But funny enough, the number went up after the NFPs. It was in 70s, now it shows 86%. So again, there's always more than one opinion. That's what moves the market. So I guess we will find out in about 10 days what Feds are doing in interest rate decisions. So as of now, there's an 86% probability of another rate cut of 0.25%. Now, economic calendar. I just want to explain first, especially to people that are not familiar with that. This is public information. It's being posted ahead of time from the same source. You can find it with us on the web trader or the mobile app, or you can just Google it. What I do here, I take out only the high impact events. There's so much more. You can browse and choose what really is connected or makes sense to your trading. So this is, again, high impact events for this week. Let's go through them really, really quick. Sunday, GDP numbers from Japan, CPI numbers from China. And here we go. As I said, we have 4 interest rate decisions. So the first one is Bank of Australia interest rate decision on Tuesday. I guess they will be doing it while we sleep or just trying to wake up. Then we have CPI numbers from Germany. This is the important number for the Feds before their decision. Of course, the week later, we have CPI numbers on Wednesday. Another interest rate decision from Canada on Wednesday. Thursday, employment data from Australia, and another interest rate decision, this time from Switzerland, Swiss National Bank. And here we go, the ECB decision on Thursday as well. And definitely worth watching, with press conference, of course. And we have manufacturing index on from Japan. So these are the things, again, the key points here, the 4 interest rate decisions: Australia, Canada, Switzerland, and European Union. And of course, the CPI numbers from the US, and all of them pretty much important, but the interest rate decision and CPI are first priorities. Okay, so these are the things. Now, as I said, the 10-year yields, I couldn't reach my regular chart, so this one is different, but it shows the same thing. So you could see here, after double topping here at 4.5, that's what the article says, we've been sliding on 10-year yields, which give a little bit of push to US dollar down, and actually it gives a boost to equity markets. So that's as far as the 10-year yields. Okay, and as a tradition, we started a few weeks back, the leaders and the losers for this past week. Within commodity world, you have cocoa moving higher, 4.9%, coffee up 3.87, sugar up 3.13, and on the losing side, we had natural gas. After this recent move, we sold again. We're down 7.6%, palladium down 3%, heating oil down 2.8%. So that's the commodities. And we had pretty big moves on Forex. We have USD CAD moving higher. We'll talk about it in details when we get to Forex. And these 2 currency pairs that have been called commodity currencies also suffering. Australian dollar against the USD down 186, and New Zealand down 1.6. It could be that these 2 guys are reacting to the upcoming interest rate decision, which is planned to be lowered, both on Canada and Australia, that we just went through. Okay, so let's move to the charts now, and let's start analyzing a few things. So we'll start with indices. As usual, we start with China and see what's happening there. On the daily chart, China index is not doing much. As you could see here, again, for new people, it's important to explain these big moves here. So Chinese government took some measures to save the economy. They injected some funds and changed some things for the banks and other things. We had a huge move reaction to it, recovering few years back. And then in 2 sessions, we just erased half of that. And since then, we've been zigzagging and pretty much sitting at the same level. So that's on China. I guess we'll see what's next. Trump is coming in. It's very, very important. Threatening with more tariffs for China and so on. I think the chart also shows they are really trying to see what's next in that area. So that's on China. Japanese index had a nice move at the beginning of the week. Then it didn't do much on Thursday and Friday. And of course, moving to US indices, we're at all-time highs. S&Ps, you can see in the weekly chart, much better. We had a nice 3rd consecutive week to the upside. NASDAQ, the same thing at the all-time highs this week. And Dow Jones was the one retracing. A lot of it to do with United Health, I think. Stock dropped significantly. I'll give you more details when we get there. So indices are the all-time highs. Now, DAX was, as they say, on steroids. It's just moving higher, excited about that upcoming interest rate cut, and it's just moving, and moving. Now, what catches my attention here, that as we're going higher, the price is going higher, but the volume is getting lower. So that could be a sign of possible overbought signal, just my opinion. But as of now, everybody's excited about interest rate cuts, free money or cheaper money, good for businesses, and things are going higher. Even though big factories are closing, economy is not so great. Volkswagen's closing factories and other things, but the market is moving higher. So we'll find out what's next. So that's as far as German index. UK tried also positive week, but we're still not at the all-time highs. We're a little bit far away from it. Now, French index, first signs of positivity after 6 consecutive weeks. You know, there are issues there with the government and other things. I'm not big in politics, so I'm not going to comment on that. But market reflected, and then we have a nice bounce, erasing 3 weeks pretty much of losses in 1 week this past week. So let's see how the French index plays the upcoming week. So that's as far as indices. Now let's move to individual stocks. I'm going to move to MT5 here. So let's start with NVIDIA. As we know, NVIDIA is the one moving the markets, at least NASDAQ, and it's a big representative of the AI industry as it creates the hardware for it. So here we go. Nothing much to say. As you can see here, we had the all-time highs 3 weeks ago. It was a positive week for NVIDIA, but it's really choppy trading here. We had 3 consecutive days down after the earnings, right? Just to remind us again, if you're not following NVIDIA, few things. NVIDIA came with great numbers, great projections, but not good enough for investors. The stock sold, and then as the market continued higher, NVIDIA continued with it, but we are a little bit shy of the highs, probably another $5/10. So that's NVIDIA. Now, Salesforce had amazing earnings. The stock gapped, and we are holding to that gap. So there's nothing above us, right? I think also a lot to do. They start implementing the AI into their services. They deal with the CRM business and other things for customer tracking and business. Here we go. Nice gap holding, nothing above. If the market continues, we might continue higher. If we go into correction, we might try to get the gap. As you know, a lot of gaps. I don't know what the percentage is. I don't know if you can just do a general calculation, but in some cases the gaps are being closed before anything else happens. So that's on Salesforce. Now, as I said to you, the United Health, everybody heard about it. It was all over the news. The CEO of the company got shot at the next to the hotel in New York City. The stock reacted initially, and then we had a drop, and then continuation. So the shares lost a lot of volume. If we take this, even this part from here, around 610 to 549, 550, about $60-$70 we lost in United Health. So I think that affected Dow Jones as well as their big holdings. I mean, United Health is part of the Dow. Okay, so that's something to watch. We came to the previous support possible. I guess we're gonna hear more about development and who else is gonna take over and so on. So that's UNH. Two major stocks are reporting. We're still in reporting earnings. We have Oracle reporting on Monday. You know, it's a serious company. And it looks strong. On the daily chart, we had the gap, and we closed at 190, 191. They're reporting on Monday. Another serious player is reporting on Wednesday. That is Adobe. Here we go. Adobe also had a nice run recently from around 500 to closing at 550 to 60. As you could see, it's been going up and down. It was a sell-off here and nice recovery as the market continues. Let's see how the earnings will affect the price of the shares. Now, let's take a quick look at the big guys, what they do in general. The big guys, Magnificent Seven. As we know, Tesla is super strong. It's just flying. 389. I mean, it was obvious. We said it a few times since Elon Musk helped a lot to support President Trump. He got appointed to a position in the White House as well. So we spoke about it that the future for Tesla is super, super bright. It's just going higher. Something that it's no news, but I guess the shareholders are very, very happy. And it looks like it continues to celebrate here. Apple. Apple is trading at all-time highs. We have a few consecutive weeks to the upside. It looks good. Meta as well, trading at all-time highs. Super strong week for Meta. Google also shows strength, but as we know, Google is going through some issues of the US government trying to break the company into few parts, trying to break the monopoly. Microsoft also had a nice week to the upside. We just came above the strong resistance here at around 440, closing at 443. Amazon, super strong, flying as we know. December is the shopping season, starting with Black Friday after Thanksgiving. And traditionally, it's a strong month for retailers, online businesses, and so on. As you could see, we are at the all-time highs. Super, super strong moves. Intel, as we know, they have a reorganization with the management. The stock had a nice try here. We came to 26 around here, a little bit higher. And since then, we've been sliding, just totally disregarding the strength of the market. So let's see where we're going to stop. Just to remind us, we spoke a while ago, around $19. There was a book value of the company. So since then, we had a nice move. So I guess as we get closer to that point again, we'll see some buyers probably trying to enter the market. And let's take a quick look at banks. Banks are continue to be strong. The initial reaction of banks was very strong with the Trump victory. And as of now, they did post a new high about a week ago. And as of now, they're really cooling here. So let's see how this upcoming week will play for banks. And I just want to bring two assets that we mentioned a few times. The SQQQs, that's, you could see here, it's ultra short on Qs. It goes the opposite of a NASDAQ index. As you could see here, it's been selling. And something to pay attention to. If the market continues rallying, this asset will continue selling. If we see the turnaround, we might see a nice move to the upside on SQQQs. Not to confuse it with QQQs, right? Those are both ETFs, but QQQs ETF for NASDAQ. The S stands for short. In this case, it's ultra short, so it's ultra sensitive to the market. So it goes in the opposite direction of the market. And another one, it's the asset that is moving with VIX, with volatility. That's right here, pro short VIX short term. So here, when the volatility increases, as we had here, the beginning of August, if you remember, it moved from $20 or 20 plus all the way to 65, and then came right back in a few days. So it's a super volatile instrument. Some traders like to watch it and try to catch the volatility in the market. So those are the things. All right, so again, we'll see how this week plays. We have 10 days to the Fed's decision, and we are in December, which is a positive, traditionally month for equity markets. Important to remember that. All right, moving to commodities. As we said, we had few winners. Cocoa is one of them. So let's start with cocoa. I guess there's still physical shortage in West Africa. So cocoa, after trying to break down the 7,000, it couldn't. Since then, we had the pretty much vertical move with few corrections to the upside, closing at 98.56 on Friday. So I guess if cocoa decides to move, there's a 10,000 psychological level. There's also a high of 10,295 they will reach on 13th of June. Since then, we sold. So we'll be following cocoa, definitely. Coffee, similar idea. We had a nice move on coffee, a strong correction to the downside, and a strong rebound. As you could see here, we just passed the previous resistance. We'll follow coffee. First of all, we want to see how it reacts if it gets to the 335.35. If we see rejection here, we might slide lower. If we break through it and start establishing support, we might continue higher. That's coffee. Sugar, of course, some people like sugar in their coffee. Here we go. I had a strong week. You could see here. Some might consider it as a bullish flag. You have a pole and the flag, and then breaking the pre. This is a weekly, so it's a strong move here. We raised 2 weeks of losses on the daily chart. You know what? We can try something. Just throw an approximate trend line. So you could see here, this is the pole, this is the flag. Again, it's very, very subjective. As I always say, if you try to see something, you'll convince yourself. So I'm not trying to convince you. I'm just saying how some traders look at it as a pole and the flag. And the moment we break out from the flag, we might continue higher, repeating this leg. So we're definitely going to watch that. And sugar. Now, natural gas, it plays with this support again. So it did move nicely to 354 with this spike here on 22nd of November. Then since then, we've been sliding slowly, and reaffirming this or reconfirming the support at around 301 was a resistance. And now, as you could see here, every time we get closer, we're bouncing. So it looks like this 3 level is the level where the buyers are willing to get in. So every time we get closer, we bounce to the upside. So let's see how this week will play for natural gas. We did close actually high on Friday, but for the week, we had a second consecutive week for to the downside. Okay, that's natural gas. Palladium also had a down week. We had a nice run here, and then we started selling since the end of October. We came to this 925 level, moved higher, had a strong resistance around 1044 with few tails higher. And now, after closing on Thursday below 200 moving average, we continue. So if we continue sliding, this 925 could be retested. If we get above 200 moving average here again, we might move higher. We'll find out what's happening this upcoming week. Heating oil also is sliding lower. It's been super weak, as you could see here. We kept on making lower lows. We're below all moving averages here, and we're very close to this previous tails low of 211.62, and the major support around here that we hit on September 11th this year. The low here was 2.0414. So if we're not holding this, we might be sliding lower. We'll be following that. And of course, let's take a look at the regulars. Gold is definitely sitting, waiting for that decision. We did have spikes up and down. We're sitting between 150 moving average here. Since this drop, which was significant, we've been sitting, and I think we're waiting what's happening with the Feds in 10 days with their decision. So that's on gold. Oil tried to run, as you know, and didn't work out. Since that run, the beginning of the week, we just sold 3 consecutive sessions, closing at 67. And I guess we'll find out. There's some things, or serious things, happening in Syria, as you know, and we'll find out how that affects the major situation in the region, and see if that has effect on oil as well. And of course, I think all these things it got more intense since Trump's idea of drilling. We spoke about it a few times. Drilling of Trump has nothing but adding more oil to the market. So it's very simple logics and diluting the price. So maybe that's the idea. And of course, the continuous weakness on China is not adding any demand to oil as well. So as you can see, we are sliding lower on crude oil. Okay, that's as far as commodities, and let's go to Forex. And here's the dollar, US dollar, as we said. The weekly chart, if you remember a few weeks back, we said that for the first time in 2 years, we closed out of this channel here. Then very next week, we just dive back in, and the second red week we have here. So as 10-year yields are sliding, that also is not helping dollars. You can see here, upcoming possibility of interest rate, which some of it is already priced in, also push it down, but we're still holding here. So I guess we have to wait for that interest rate decision. Also, CPI numbers this week will add a little bit of an idea what's happening. So similar to gold, dollar is sitting around these levels and waiting for that decision. Now, as we said, we have 4 interest rate decisions this week. Australian dollar already reacted to it super weak, totally disregarding the weakness of US dollar. It just moved lower. It could be that that decision already priced in the interest rate cut. Super weak on Australian dollar. Now another decision comes from Canada. You could see here US dollar is just stepping up or flying up against the Canadian. I know some traders are disappointed. They were shorting the instrument, expecting the weakness of US dollar, and some of them are experiencing a very painful situation here. So let's see what that decision does to Canadian dollar. As of now, we are looking super strong on USD CAD. That means the weakness of Canadian dollar continues. On the monthly chart, we have 4 consecutive months to the upside. We had these 2 tops here, one on 2016 at 146.88, and this one 146.66, very close to that one. And now, if this continues, we might hypothetically move there, or we might turn around. Canadian dollar looks very, very weak. Now, Swiss franc, let's see, a dollar Swiss. Dollar Swiss just broke the 200 moving average, a bounce of 50 moving average. So let's see what that Swiss bank decision will do to the currency. And of course, the euro is reacting positively to the weakness of the dollar, of course. Now, in the big picture, we did have a sell-off in euro dollar, and we are sitting here. Pretty much it's a mirror image of the dollar index. As you can see here, we've been sitting on this support. We broke briefly below it, as we did on dollar index. If you take this chart upside down, and then we're back into the channel. Just want to show you. This is the opposite situation here, pretty much 1-to-1. Okay, so let's see how that interest rate decision, this week's decision, will affect euro dollar. And of course, we want to see the Japanese currency, the Japanese yen, as I mentioned to you, I think last week, the inflation is growing, and that might push the Bank of Japan to some actions to increase the interest rate. If you go around the currencies against the yen, we had the weakness. Friday was a little bit of a bounce. Oh, this is a weekly chart. I'm sorry. Here we go. We had a sell-off of the currencies across the board against the yen. Then we just had some correction. Australian dollars continues to be weak against the yen. Canadian dollars weak against the yen. Euro bounced a little bit and then it sold on Friday. And pound, similar situation. New Zealand dollar as well, similar to Australian, it's super weak in general and against the yen as well. So definitely we'll be watching the yen for possible news or ideas or rumors or actions by Bank of Japan. Of course, here we go, the champion, the Bitcoin. We had a nice move here. On the 5th of December, we crossed 100,000, went as high as 103,928, almost 104,000, and then we're playing around here, and it's very simple. You know, if you held this up to this point, some people had this price in mind as an exit point. So we're probably going to see this up and downs around 100,000 until we decide which way we go. Of course, some have much higher expectation. 300,000, 1 million. I don't know, all these ideas in people's mind, which could be possible. Also, the profit taking could cause a sell-off here, as you see this spike. The moment we broke, immediately triggered the sell-off on the high volume. So we'll continue. Of course, other cryptocurrencies are moving higher, and what triggered it, of course, is the positive mood of President-elect President Trump, and it looks like the cryptos are having a nice future. Okay, so that's it pretty much of technical analysis. Try to summarize what we spoke about. We have a busy week followed by last week's NFPs. We have 4 interest rate decisions this week. We have CPI numbers. The decisions are coming from Australia, Canada, Switzerland, and European Union. We still have some reports, Oracle reporting on Monday, Adobe reporting on Wednesday. We had a big slide in UNH stock, United Health, due to the unfortunate event of CEO being shot. China is continuing being weak. The war in Middle East now is intense in Syria. Lebanon, Israel war is on hold. There's a peace treaty, and war in Gaza continues. Oil is sliding. Gold is waiting for that decision. Feds could be cautious, as we said in the article, about the next cut, even though, as you could see here on the CME tools, the probability increased to 86%. Okay, I want to wish everyone a great weekend. We still have Sunday ahead of us, so get some energy, get some juice for the upcoming week. And I want to wish everyone a great, successful, productive week. And we'll see you next Sunday. All the best. Take care.